It will be central bank digital currencies. That's where they're going to go to next.
Yeah.
And I've maintained that during good times, or quote, perceived good times, they won't be able to bring a central bank digital currency anywhere or worldwide. They have to do it during massive stress. So they will allow these markets to collapse. The great taking will take hold. People are going to lose. Uh, they're going to lose their assets.
Yes.
Whether it be a bank, a broker, insurance company, whatever. And at that point is when they will try to introduce the CBDCs, because the public will be begging for help.
They won't ask your permission when it happens. They'll just flip the switch. Because when the banks go under, the brokers freeze withdrawals, and the pensions vaporize overnight, the people won't be asking questions. They'll be begging for solutions. That's when they'll unleash the central bank digital currency: programmable, traceable, and irreversible. Over the past decade, global finance has steadily drifted towards centralized control, digital oversight. Central banks have stretched their balance sheets to historic extremes. Government trust has eroded, and traditional monetary tools have lost their potency. Now, as inflation bites and confidence weakens, what lies ahead is not a return to normal. At the center of this transition is the quiet but deliberate move toward central bank digital currencies, CBDCs, an instrument of total monetary control that is waiting in the wings for the right moment to emerge. In today's discussion, Bill Holter joins Francis Hunt to examine the conditions under which CBDCs will be deployed, and why those conditions may arrive sooner than most expect. Holter argues that these digital currencies cannot be introduced during periods of calm. They require systemic stress, widespread loss, and public demand for intervention. He warns that a carefully timed collapse, what he calls the Great Taking, will likely precede the rollout. In such a moment, when banks freeze, brokers default, and citizens face devastating losses, digital money will be offered as a solution. But far from solving the problem, it will mark the end of financial autonomy for billions. This conversation moves well beyond theory. It explores what a reset looks like in practical terms, why the traditional financial backstops no longer exist, and how gold and silver remain the last credible defense against the collapse of fiat trust. If you're looking to understand where the global economy is truly headed and how to position yourself before the system resets, this is the video for you. Don't forget to like, subscribe, and leave a comment with your thoughts. Now, let's get into the conversation.
Yeah, I think I'll give my conclusion first and then work my way back to that. The conclusion is there is no white knight this time. Every financial crisis we've had going back to, well, I guess you could say going back to 1973, 74 even, there's always been a white knight that could come in. There's always been a central bank that could step up and lend the money. 2008, 2009, the white knight turned out to be the balance sheets of these various sovereign nations and the central banks themselves. The problem is they've blown their balance sheets up, the treasuries have, and the central banks have blown their balance sheets up. I mean, the Federal Reserve has got a negative equity position right now. The same could be said for Bank of Japan. Same could be said for the European Central Bank. They're all broke. They're all busted. Their balance sheets are in shambles. There is no white knight this time, with the exception, theoretically, they could blow gold to 25,000 an ounce, 50,000 an ounce. The white knight would be the central banks that hold gold, and then their balance sheets get reflated.
Yes.
But that said, $25,000, $50,000 gold completely breaks confidence in the credit markets and breaks confidence in the currency markets. And that's exactly what where we're headed on a global basis, is that this is going to be a currency/credit crisis. And there's going to be a complete rethinking of what the foundation is to the financial markets. Right now, the foundation to the financial markets is debt, primarily U.S. debt that's held on central bank balance sheets. but that is the foundation. And debt, if you want to call it sand, it's a foundation of sand. Whereas gold, gold as a foundation, gold doesn't go up and down in price. It's the currencies that go up and down, and primarily, I mean, long term, all currencies go down, and long term, gold goes up in those currencies. So I think that's my answer, is that there is no white knight this time. The problem is they're going to try to reflate. And like you said, who's going to be the buyer? Because we're already seeing China, we're seeing Japan, we're seeing other nations liquidate treasuries at a time that the U.S. Treasury has the biggest appetite in its history, simply because, well, if for no other reason, because now we're paying $1 trillion a year, over $1 trillion per year in interest alone. So that's a confidence breaker. But at the same time, from a fundamental standpoint, you've got foreign central banks, sovereign treasuries liquidating U.S. treasuries. Who's the buyer? And the buyer ultimately will be the Federal Reserve, and it will be outright in-your-face monetization. Yeah, and to that point, you can actually see it with your own eyes this time. The bond market has always followed what the Federal Reserve, the bond, I shouldn't say followed, because the Federal Reserve in some instances follows the credit market. But what happened a year ago was the Federal Reserve lowered interest rates 1 full percentage point. I think it was in 3 cuts. Yet, what happened to market rates? Market rates went up 1 full percentage point. This is the first time in the history of the Federal Reserve, going back 100 plus years to 1913. It's the first time where the Fed acted, but the credit market did the opposite. Yes. And that tells you that the Federal Reserve is losing control of the yield curve.
There's no cavalry coming this time. Every major crisis of the last 50 years had a central bank bailout, a sovereign lifeline, or an emergency stimulus. But now, the rescuers themselves are drowning. The Federal Reserve is running on negative equity. The Bank of Japan and the ECB are leveraged beyond repair. Their balance sheets are nuclear waste, and the world knows it. Foreign creditors aren't just losing faith, they're cashing out. China, Japan, and sovereign funds are dumping U.S. treasuries while America racks up over $1 trillion a year in interest alone. The world's biggest borrower is losing its last lender. And the only buyer left? The Federal Reserve, monetizing debt in broad daylight. That's the final stage before a currency crisis. And yet, there's a twist. There is a white knight, gold. If the central banks mark gold to $25,000 or $50,000 per ounce, they could theoretically repair their balance sheets overnight. But in doing so, they would torch the credibility of the dollar. It's the ultimate paradox. The only thing that can save them is the very thing that reveals their fraud.
Francis, as far as China and Russia attacking the U.S., it would cost them not even a ham sandwich to do it. I mean, if they put together $25 billion, that would completely clean out COMEX silver, COMEX gold. Everything would be delivered, and you'd have many contracts standing for delivery that could not be delivered on. And for nothing, with no shots being fired, no bloodshed, the American way of life would be over, because that would be proof that the fractional reserve system is fraudulent. Yeah. And $25 billion in today's world is nothing. Actually, $25 billion today is, call it 4 or 5 days of U.S. debt accruance. I mean, we're accruing what, $5 billion a day?
Yeah.
Between interest and new borrowings.
In fact, Putin was recently reported to say, with regards to the treasury theft, which was $300 billion,
right,
that actually represents a small price to pay for them developing a second way and a second system. Exactly. And actually, he's seeing it almost as a bargain. He said, look, you did this, and here's our development. And they already have a funding and a financial system And of course, Iran is trading in the yuan now for oil, and all the things that people said, well, China doesn't have any trade in its currency, all of these things. Slowly but surely, these things are coming into place that feels very much replacement.
Yeah, that's when the end game started, was October of 22, when the
Biden,
$3 billion was sequestered. The rest of the world looked at that and they said, hey, wait a minute. If the U.S. can do that to Russia, they can destroy us. And that changed the mindset of the U.S. Treasury market being the safe haven of the world. And all you got to do is look at a chart on gold, and that tells you the whole story right there. From that point forward, gold turned into a tractor in first gear and just kept going and going and going.
But I would also say, take a lesson. Put this video on while you are barbecuing and having your quality of life, and take a note that a message from myself and Bill Holter is that your standard of living is going to come under attack through virtue of the policies that the government that is in charge has pursued. And in 5-10 years' time, you'll look back and say, wow, these guys were telling me how it was going to go down, and I didn't take enough action, or I did. Thank God I listened. Share it with your friends. Play it during dessert time. It might seem like a little bit of a darker moment, but there's real opportunity. And I want to focus on the opportunity side for Americans in this. By not going down with the rest, the downdraft, the fall of a hegemon is the highest. This is the problem I also have, because we have a lot of US support on our channel, but every now and then a small percentage think I'm picking on America and I'm wishing it, or I'm willing it. And every time I go to America, I love the people, I love the country, it's beautiful, it's great. I don't want that. I don't want communist China to be the winner in this game. I absolutely don't. But I will tell you exactly how I see it. And the fall of a hegemon is always the guy on the highest ladder. The United Kingdom is doing terrible things. It is wrecked everything it's doing. You can point to that. You can point to China's property market and everything else. But you are on a 26-foot ladder and they're on a 3-foot one. And when they fall backwards, it's the hegemon that gets the biggest downdraft for the sustained period. And it's not being anti-American to say that. It is being honest and straightforward. And you've got to take protecting yourself far more seriously. You're going to face a far harsher downdraft in your quality of living. And what would you say? Am I beating up on you guys, or is there something in what I'm saying?
No, you're not beating up on anyone. You're just describing the math. Math doesn't lie. And the bottom line is, Americans have lived far beyond their means for 50, 60 years. I mean, go back to, well, till right after World War II. America has lived beyond its means. It had basically an unlimited credit card with no limit, and we've lived off of that. Now, the reverse of that, not only do we have to come back to living within our means, but to pay back the previous overliving, overstandard, whatever you want to call it, we've got to live below our means. So the standard of living in the U.S. is going to, and I'm not picking on the U.S., but it's because the standard of living is more outsized compared to our means than other nations. So our standard of living is going to drop further than anyone worldwide. Yeah, but don't make the mistake that the entire world is going to have a standard of living that drops. Because paper is going to blow up. The naked king moment is going to happen. And when people, the little boy points and says, hey, the king's naked, doesn't have any clothes, everybody worldwide is going to be looking at currencies and say, hey, wait a minute, I've got this or I've got that or I'm selling whatever, but I'm not taking that paper. That paper is worthless. And when I say paper, I'm talking about currencies all over the world. The fiat experiment has and is failing.
Yeah, and the king fiat is the dollar, and an anti-dollar trade is buying gold. The
Exactly.
XAU USD, and you're not being anti-American, and you're not being unpatriotic as an American by saying, have back this paper. And I'm not hating on you by telling you that either. I want you to do that. I want to save you. And too many
Protect
people
yourself.
personalize this.
Protect yourself. No one else is going to do it for you. It will be central bank digital currencies. That's where they're going to go to next.
Yeah.
And I've maintained that during good times, or quote, perceived good times, they won't be able to bring a central bank digital currency anywhere or worldwide. They have to do it during massive stress. So they will allow these markets to collapse. The great taking will take hold. People are going to lose. They're going to lose their assets.
Yes.
You know, whether it be a bank, a broker, insurance company, whatever. And at that point is when they will try to introduce the CBDCs, because the public will be begging for help.
The discussion between Bill Holter and Francis Hunt reveals not just a looming crisis, but the anatomy of a global reset already in progress. To understand where this is going, 4 key themes must be unpacked: the strategic vulnerability of the U.S. monetary system, the role of adversarial states in exploiting its weak points, the collapse of global confidence in fiat currencies, and the policy trajectory that all but guarantees a reduction in living standards for developed economies. First, Holter points to a sobering truth. It would take only a modest amount of capital, less than the daily U.S. debt accrual, for China or Russia to expose the structural weakness of Western gold and silver markets. A concentrated attack on the COMEX metals exchanges would reveal that physical delivery capacity is woefully inadequate to meet paper obligations. This is not hypothetical. The credibility of the entire system depends on maintaining the illusion that claims can be settled, when in reality, those claims are backed by nothing but confidence. And confidence, once lost, does not return. Second, we are witnessing the fragmentation of the post-Bretton Woods financial order. The seizure of Russia's $300 billion in foreign reserves was a turning point. As Hunt rightly points out, it sent an unambiguous signal to the rest of the world. U.S. assets are only safe as long as you remain compliant. This weaponization of the dollar has accelerated global de-dollarization efforts. Nations like Iran and China are now actively trading oil in yuan. Alternative payment networks are being built. Parallel reserve structures are forming. What was once dismissed as slow, marginal de-dollarization is now an irreversible geopolitical realignment. Third, the implications for American households are profound. For decades, the U.S. enjoyed a standard of living artificially supported by its reserve currency status. That privilege allowed it to borrow indefinitely, consume more than it produced, and impose financial conditions on the rest of the world. But as Holter warns, that credit card is now maxed out, and repayment is not optional. Americans will not merely return to living within their means. They will have to live below their means to pay for decades of excess. This is not a partisan forecast. It's arithmetic. Fourth, and perhaps most important, the crisis is not contained to the U.S. While America's fall may be the steepest due to its elevated position, every fiat currency is tied to the same broken model. Governments everywhere have overpromised, overleveraged, and overprinted. The moment the public begins to question not just the dollar, but fiat itself, the entire paper-based system unravels. What follows is not just inflation or recession, but a monetary transition. And this is where the conversation returns, inevitably, to gold and silver. These are not just inflation hedges or crisis assets. They are the foundation of monetary sovereignty. Gold and silver do not require a counterparty. They do not default. They are borderless, permissionless, and liquid across civilizations. They represent the only form of wealth that cannot be debased by decree or confiscated with a keystroke. In a world where trust in paper evaporates, physical metals are not a luxury. They are a necessity. The warnings have been made. The timeline is accelerating. And while no one can say exactly when the final breach occurs, the trajectory is now unmistakable. You have a choice: to wait for the system to fail and accept whatever is offered, or to position yourself now, quietly and deliberately, outside the blast radius. If this conversation resonated with you, take action, accumulate knowledge, accumulate real assets, and protect yourself while time and access still remain. Like this video to boost its reach. Subscribe to the channel for more critical insights from voices like Holter and Hunt. And leave a comment. What are you doing to protect your wealth in a post-dollar world? Thanks for watching,